cash value collateral loans. So this is something that we've been starting to use more lately. It is very attractive, what I've found, from an individual that likes to leverage assets. Maybe it's real estate, other investments and such, or a cash value life insurance policy. So a couple bullet points as far as what is a cash value collateral loan. It's literally taking my cash value in a life insurance policy and assigning it as collateral to a lender or a bank. We actually work with a bank that does this exclusively nationwide. Well, I say exclusively, they do other things, but they understand our concept with planning and such. So what a cash value collateral loan is I'm going to take my cash value, let's say I've got a policy with cash value of $100,000. And I'm going to go to a lender. Instead of borrowing from my company, I'm going to say, okay, I've got this $100K here. I need a $50,000 loan. And my options are A, I can borrow from the insurance company, or B, I can assign the cash value as collateral. Now, regardless, what's going to happen to the $100K in cash? I'm going to continue to yield dividends and interest on it. Doesn't matter if I borrow from the insurance policy, doesn't matter if I assign it as collateral to a lender, because when I do this, the actual money does not leave the policy. Again, I'm assigning it to them as collateral. In the event anything happens, they can call it, but the money does not leave. Very similar to assigning real estate as collateral. Here's the main advantage, or advantages, I should say. The interest rates on these are often and can be more favorable than what I would receive directly from an insurance policy. For example, from a policy, I'm going to get what? Between 5 and 6%, depending on the company. This is going to be a bit lower than that. Here's the main advantage. When I take this loan out, on the lender's paperwork, I actually check off, is this loan for personal or business use? What happens if I check off business use? What does that mean from a tax perspective? If it's a business purpose, I've got a potential tax break there on the loan interest. If I am borrowing directly from a life insurance policy, typically the IRS does not like when we try and deduct loan interest from a life insurance policy. They discontinued that a long time ago. Now, if I'm using it for a business purpose, if I have a CPA that I'm working with and they state, yes, it's for a business purpose, everything's disclosed properly, maybe I can deduct it, but I'm not supposed to with a life insurance policy. Whereas here, if I check off this is a business loan from a bank or lender, what happens? Pretty straightforward. I can deduct it, while at the same time, the beauty of it, what happens? I'm still earning dividends and interest on that cash value as if I never touched it. That's the main advantage, in my opinion. As far as how the schedule works, always depends on the needs of the consumer. So one, I can often take it just like a line of credit, in the sense that I pay interest only and then throw money at the principal at my leisure, or I can take out a term. Maybe it's 5 to 10 years, whatever it is, and have a payback schedule. It is just another option, a creative way in which I can leverage a cash value life insurance policy. I can practice the banking concept of this too. If my money's staying at work for me in a cash value life insurance policy, I can pay this loan back, and if I want to throw extra interest into the account, I can throw it into PUAs of the policy. I can be creative in that sense. Mainly, it's a means to obtain a lower interest rate, and if I'm using it for a business purpose, I can get a nice tax break all the meanwhile, my money's staying at work for me. That's what I want. Hope this helps.